Okay, adding to the series of how to invest for your retirement successfully. Going back to my first video, which was the question was then, am I too young to start investing for retirement? The second one was, am I too old to start investing for retirement? And it followed by, how do I know what the actual investment choices or the funds mean so I can take advantage of them? And the fourth one was about the benefit of, or the miracle of compound interest. Today is to answer a very often asked question. The question is, but how do I know how my contribution will affect my take-home paycheck? I'll repeat it. How do I know how my contribution to the 401k or 403b will affect my take-home paycheck? I'm going to make a very simple, very simplified illustration for you to understand how that is. Two employees, the same age, the same income, started the same day, just came out of orientation. Both of them make $100 every paycheck. The first employee decided, oh no, I'm just not going to do it. They decided not to put money into their pre-tax investment account. So they make $100. They're in a 20% tax bracket. They pay the government $20 first, and they keep the $80. The second employee decides, yes, I am going to do it. Again, with the $100 a paycheck, they decide to put in 20% every paycheck. Their taxable income, instead of being $100, now is only $80. Since they're in the same tax bracket, 20% of $80 is $16. You can see right off the bat, the employee who decides to make the contribution is only paying $16 versus the other one who is not paying $20. The one who can least afford it is already paying $4 more in taxes every paycheck. Now think about that. Right off the bat, this employee has an advantage of $4 a paycheck. Obviously, if you make a $10,000, whatever your contribution is reflected exactly to your tax benefit. I just wanted to make it simple for you to understand that. But not only do you have the tax benefit, the tax advantage right off the bat, you have a diversified investment choices. And you have, which is, we all know that your asset allocation gives you 82% of how you win. You also have the miracle of compounding that Albert Einstein calls the eighth wonder of the world. This is not an advice, but it is my suggestion professionally. You can't afford not to. The one who can least afford it is the one that must do it. Again, it's not an advice, but it's a suggestion. Just think about it. Now, it's just going to change your life step by step. Don't make the mistake of saying to yourself, oh, but I want to put $100, but I can't afford it. Start with $10, $5. It's the discipline that you acquire over time and your pay increases that makes your initial contribution impact less. And it just seems like you forget about it. And at the end, you would be grateful that you've done it. One thing you can never do is be 40 years old and look back and reverse your age to 20 and make the right decision you didn't make at the age of 20. So don't make the mistake of looking back and saying, I wish I did it when I was 20. Because as I said before, a 20-year-old contribution of $10 could be $150 more just 10 years later, just to be as impactful because of time. So time is your friend. Do as little as you can afford. Add on to it as whenever you get a pay raise, maybe take 1% of it and defer it to your tax deferred account. That's the video for today. As usual, if you could, scroll at the bottom of the video, click subscribe, comment. It would be much appreciated. Have a great day. God bless.